Welcome to TradeTheNBA.com. This is John. This report is for the 22nd. Well, we can see that Friday was pretty much just a soft reaction to being under the 38%. Came right back down to that 67 previous algo and flirted with the ABM yellow, which is in the 40-some range there. And not a shock. We were looking at following the move of the orange as it tests the green. And what happened was when you hit cyan and green meeting, this is shorts. Now, obviously at negative 587, you got a pretty decent dip of cyan right there, because this is actually the current readings on a pivot up. The previous dip was 692. So below that 6.25, which usually creates a bump, but with the green moving over, both cyan and green, that's negative. From a bull standpoint, what you needed to have happen at that particular point would be to have green over cyan for continuation. So this may just languish a little bit longer. So that's a detailed way of saying that we're still in continuation of this general downturn, even though we're basing. Worth noting. NQ was pretty clear on the NASDAQ there. You can see it crossed earlier. But there's been a little bit of fight between shorts and midterm buyers here from this standpoint, because you've got the battling it back and forth, as well as you've got red DOC over the negative 13.5, which is helpful from at least a support standpoint. So when we talk about support, it's like you've got to actually have buyers for there to be support. You can't just pick a line and say that that's a support. You have to look at the line in association with what actual money is doing. And if one doesn't exist, then we expect a break. Particularly like when we were watching this move, we expected a continuation lower. So looking at the 50 became a resistance point rather than a support of any kind. And that's the easiest way to describe it from that aspect. And the euro, it's real problems. Pretty much Italy has been threatened with collapse. Now, of course, they're trying to say that Italy's collapse, banking-wise, won't affect the rest of the EU, that it'll be an internal implosion. Boy, I guess some serious wishful thinking there. But it looks like some intervention there to help support it so that it doesn't break down, because once a free fall starts in the euro, that actually will have a much bigger down move for the S&P than people realize. So I think that you're seeing is because this readings are not all that impressive for the euro to be bouncing back as it is. So dead cat bounce. Now, I don't know that we had enough selling for it to be dead cat anything. And of course, treasuries hanging around at 113. We would expect those to continue to decline. The bright side of that is retail sales have been disappointing, and therefore that's prevented all-out belief that the economy is still, rip-roaring. So, yeah, some people are lagging in the thought process, but that's all right. And oil's retraced, with some of the issues with Saudi Arabia and that. There's a little bit of interest, but I think what you're seeing is a little bit of the pairing of the gold trade moving out of oil and back into gold, because all you do is look at the corresponding decline in oil and the matchup of gold rising, and you can see that rotation. I know it's a tough thing to know these things in advance. So I had all these lovely lines that, like I say, I don't normally put in there, but I wanted you to see what the effect of some of these positive extremes have. And so, we had these ranges from before, and you can see that we broke down, even in the post-market, selling dropped well below them, and then cut the bid after it was done, and you've broken back through both of those. They become interesting from a standpoint of after they've already been filled in that. You'll notice that right here, the lows captured both of them perfectly. And then in post-market, they clear any stops and moves right back above. If we look at the action from Friday, I'm going to shrink this down a bit. And and there's our full chart of it. So we ended up with a positive extreme, so we retraced, came all the way back down, made a whole new run, a whole new series of them, but as we got overdone and started to break down, interesting one here too. This is a good point out where you have a DOC spread with falling orange. Tend not to have as much power until the DOC then breaks the orange. Right there, you ended up with the positive extreme, and finally, the slow breakdown. This was like a series of DOC spreads, all at the exact same value, which coincidentally happens to be a peak out right around that 97.50. Coincidence? Probably not, but that's for another time and another story. And then, of course, we ended up with the dips below. Usually that first one on the pop back up doesn't usually last too long. In this particular case, that was pretty clear. Green had popped up, though, and then made an immediate reversal spider, and right at the 84 range, and then boom, cascaded to the lows right there, and then we repeated the exact same cycle back and forth. And so some of these were pretty decent long runs, because you can see this is the big difference of where the green moves above and the cyan's a little bit later in making the return, and right there is where it ends, pretty much where it began, and boom, then it recycles for a brand new buy configuration right there, breaks out to the brief move, ends, and then you just wait for the confirmation on that complete collapse and the rejection right here of the green, and cyan with green then moving below red right at the 80 becomes clean. And I mean, that takes you really quick to 62. So I mean, that was like a super fast, like easy money. Didn't even have to think about that one. That was just like as clean as it gets. And we came across, and then again broke down from the end of the day. So all in all, really some nice action. I think that we've been very pleased with the way October's gone. My goodness, the volatility has been through the roof, and very clean, especially in the description of being able to show you how easy it is to follow some of these longs that are successful, as well as the ones that are likely to not have as much strength. And I think we've proven them very effectively time and time again, which just makes it all that much more powerful in able to stick with a trade, even if the signal indicates one thing and you get price action that's slightly different. And it's always nice to know that it's like, look, you've got the signal that's telling you one thing, price might be doing another thing for a short time, but that literally is what that means, just for a short time, and then it reverts exactly to what the expectation is. So all in all, good stuff. As always, though, I will keep updating the Skype chat, put any new additional information on there, and we'll be watching for positive extremes as we come through here. Any actual red ones just yet, which means new money still keeps popping in right around these levels. So all in all, that's the current lay of the land to start the week. Trade well. We'll talk again later.